Bob Millie, and we are back with another trading video. So today, without wasting more time, we're gonna focus on a counter-trend trade that I took last week before the market closed. As I promised this video in the shorts, thank you for tuning in. If you're new to this channel, my name is Bob Millie, and I document trades that I take and other trades that I often missed. But the best thing is I'm not introducing it. It's a trading strategy that is mostly used by many traders, which is called the break and the retest. So the basics to this trading system is you draw major zones on a chart, and then you wait for a zone to be broken and then retest it, like a simple demonstration that I'm showing you in this tab right here. Like for example, you are in an uptrend or a downtrend, and then in this case we have an uptrend where a zone, a key level is broken, then retested, and then the price keeps on going up. So we're gonna start by knowing what are the basics to this trading system, and then at the end of this video I'm gonna break out one trade that I took on USDJPY. It was a counter trend trade, but also this model of a break and retest. So basically the market moves in two forms of directions. There is an uptrend where the market keeps on making higher lows and higher highs, and the market keeps on testing key levels to move up, like you see in this chart here, this small demonstration that can show you what an uptrend is. I think you're familiar with this. And then we have a downtrend where price keeps on descending, making lower highs and lower lows. So here price keeps on breaking zones and also retesting them to keep pushing price high lower. So now the break and retest is a simple model where in an uptrend a key level is broken right here and then retested about right here, and then in a downtrend price is broken to the downside right here and then retested here to keep pushing price down. So if you enter a trade right here in a downtrend after the key level has been broken, you would likely wait for a confirmation to show you that price is still going down, and then you enter a trade and it keeps on descending. Then the same occurs in an uptrend. You wait for a zone to be broken and then wait for a retest, and then you enter your trade hoping for price to keep on moving upside. Yes, like I'm demonstrating right here. And so this is the first thing that you have to put in mind. The break and retest almost works on every way of the market movement, either a downtrend or uptrend, and it can even work when the market is choppy or moving sideways, or even in a rangy market where the market seems to not have a direction and keeps on hovering around in the same zones. And now the second thing you would like to know is that when you are trading this break and retest model, you don't usually take all sorts of areas in the market. So there are key levels that the market almost respects many of times, right? Like there is a key level like this level right here. I'm just demonstrating this, not a real-time level. Let's say the market has been testing this level for about 5 weeks. Like it's going up, retested this, and then went down below it, retested it, keeps on descending, and then after a couple of days it comes back to this level, and then first of all rejects it a bit and then goes up. This shows that this is a key level where the market has been making major movements. So this is what you have to identify first. You have to know which level the price is keeping on testing and testing on and on again. That's the second thing. And the third thing you want to do, you have to check for confirmations, because not all levels are valid. If you don't get a confirmation, you don't enter the trade. It's as simple as that. And now that you have gathered enough information on what the break and retest is, we are going to break down a simple trade. It was a counter trade. So this is a trading system that is not very advisable because it's high risk, but I took it because of different confirmations. We had been buy chart for about a long time, but then I marked up some zones, and then I thought that it could be a good idea if I took a counter trend, because this trade, the market seemed to have rejected different zones down here by these wicks, and then was going to start a form of an uptrend. So without wasting time, let's start by marking up our zones. First of all, when I'm marking up my zones, I start from the higher time frame, which is the daily time frame. Let's move on to the daily time frame. This you see here is the daily time frame, which is the broader market time frame that I use mostly. And then we're going to start by marking out the lows and the highs of the market. So this is the lowest point of the market right now, and then the highest point is this. But usually this is not very important because the market is a huge way from this place, so we are not going to mark all these major zones. We're just going to make the major zones where price seems to come back to. This is another major zone. As you can see, price has tapped into this zone, and then after tapping into this zone, you can see right here, price tapped into this zone and had a very major shift upside, and then came back to this level, broke under it, and then came back and is also retesting it in real time. But right now I'm not going to be breaking down a real time trade. It's just a trade that I took last week, which was a counter trend trade. So this was how I saw the market, regardless these major other movements that the market has been making since it's a Monday, because price has already got out of the weekend break and is starting to move again. But I took this trade last week before these other candles. So I'm going to be moving down to the 4-hour time frame to picture a very simplified view of the charts once more, and then you can simply see that there are other zones in this market that I usually watch for, like this high right here that formed a double top, and then price went down here, broke this zone, retested it, waited for a confirmation, and then boom, went down. But this is not the trade that I'm going to be talking about right now. Let's quickly dive into the 1-hour time frame for you to see this trade without wasting more time. The basics of this counter trend trade is by taking a trade which is opposing the normal trend. You can easily spot that difference. So in a normal trade, you are trading with the trend. So if it's in a downtrend, like this market of USDJPY, you're trading with the trend, waiting for the market to retrace at major zones and then wait for confirmations, then sell. But if it is a counter trend trade, you are going to wait for this particular level here to be broken to the upside, and then you wait for a retest towards this level, and then you wait for a confirmation down here. Then you can aim for more price movements to the upside. But this is a high risk trade normally, because you are opposing the trend which you have no power to oppose normally. But I took this trade after basing on the higher time frames rejections down here. I saw this zone was being rejected by wicks, and then I suppose that this market could be going to break this and start to make higher lows and higher highs, which would mean it would start an uptrend. So this was another key level that I identified right here on these wicks. You can see that these are wicks that show rejection towards the downside, and you can see after this long bearish pin bar, the market it was introduced to some sort of selling power. So more sellers came in, and and then pushed the price down to this level where it finally rejected. So I'm going to take you down to the 15 minutes time frame. I made this analysis basing on the higher time frames. I saw price was in a downtrend, as you would see in the 4-hour time frame. Price was descending down, breaking zones and retesting them, and then moving lower. The same applies to the 1-hour time frame. Then I saw this rejection, and then I said I'm gonna wait for this zone to be broken, retested, and then I would target higher time frames for a bigger win. So I quickly went down to the 15 minutes time frame for my entry. So I'm going to replay price to take you into the real-time things that I was watching for me to catch this great trade that I called. And so you can clearly see right now what price looks like in the same time that I was taking this trend. Let me replay price so that you could see what I was looking for in that exact time. So first of all, I had noticed this trade about on the 22nd of April, about 13 Eastern time. On this chart you can see it. And now I'm going to take you through what I was looking for you to get a picture of what I based on to take this trade. And now I'm going to zoom into the chart so that you can see for yourself what kind of price action I was looking for. Now you can see these zones. This is the zone that I marked up on the 1-hour time frame where I showed you different rejections to this level, and then that pin bar was made up by these two major candles, right? So price pushed up, rejected by these wicks, and then sellers came in, making this big bearish candle, and then this signified that sellers have overtaken and the market was forced to go down. On the 4-hour time frame it would be shown as a pin bar, right? And then I marked up this zone. Let me mark it up with a bit of a rectangle, because a zone is not just a line, it's an area where price is acting on. So it can be, it's a range of pips, it's not just a line that price is respecting. Now let me just adjust it to these wicks up here. I'm just going to drag this down a little bit. So this is the key area of resistance, right? So price broke under this and then retested it multiple times, but you wait for a confirmation. So a major confirmation here was the close of the pin bar on the 4-hour time frame, which is this bearish engulfing candle right here. If you were to take a trade with the trend, basing off of the trend, you would enter a short position right here. Then your stop loss goes above these candles right here, above this ginormous bearish candle, and then you would easily target this low right here, giving you a 2.8 risk to reward ratio. But this is not what I was documenting up for you. I was trying to show you how to trade with the trend, but this trade that I'm going to break out starting from right now is a counter trend trade. So this is the real time market conditions that I was seeing right then. So I had marked up these zones on the higher time frames, basing off of zones that caused major price movements. And then after these rejections to this zone, I started noticing that the price of USDJPY was starting to form some bit of lower lows, now higher lows, right? This is a higher low and this is also a higher low, right? Price, I anticipated that price was pulling up, but not pulling up for just a retest to keep on pushing down. I anticipated that price would be entering an uptrend, right? So then I waited for price to approach this level to see if I was right or wrong. Now let's break price. Okay, so So right now you can easily see that price has broken above this zone, which I had marked up right here by this rectangle. This is a range of pips where price had rejected, so it was a resistance for these choppy market conditions right here. And then after price breaking above this zone, I anticipated that price was about to enter an uptrend, because you can see easily here there are a bunch of lower lows that has already started in the market. I anticipated that this was a major counter trend trade that I could easily monetize on. So let me go through what I based on as my form of entry. So as a form of entry, first of all, you have to wait for candlestick confirmations. The first form of candlestick confirmation that represented a continuation of this trend would be a bearish engulfing and a bullish engulfing candle, where the previous bearish candle is completely covered by a new bullish candle, right? If you are new to trading, I don't think it's easily applicable to you, but let's imagine this as a bearish candle, right? And this is a bullish candle. This is an easy form, an easy demonstration of what a bullish engulfing candle pattern could look like, right? So the bearish candle was completely engulfed by this bullish candle, which marks up increase of volatility or increase of buying power at this level, which could lead to continuation of this trend, right? When I mean buying power, I mean the big buyers, banks, hedge funds, they are entering at that zone and pushing price higher. Another confirmation would be a morning star. So a morning star, you would have to find like a bearish candle closing and then start another bearish or bullish candle, which is a little bit minor to the first candle. And then to finish up the morning star pattern, you would like to see a bullish candle that would engulf all of these two candles together, or it would be some sort of slightly smaller than the first candle, but there are normally three candles that form a pattern, right? Showing the power of the buyers has completely engulfed the sellers' power at the particular zone, right? You can easily picture this. So this is what I was looking for at this zone. I was looking for an indicator of price patterns that would show me that buyers have stepped in this actual trade. So I waited for price. You can see price unveiling. So we had this break of this zone and then the retest, and then I was waiting for the confirmation to enter this trade. You can finally see that I got my candlestick confirmation right here. This is the form of candlestick confirmation that I was looking for. This big bullish candle that completely engulfs this previous red candle. This is the bearish candle that has been engulfed by this bullish candle, marking up the bullish engulfing candlestick pattern. So I was going to enter at this zone. I quickly noticed this a few seconds before this candle really closed, and then I placed my entry right at this point. For my stop loss, I put it slightly below this zone at this rejection right here. So I was expecting price to keep on going up, but if price would dive deeper into this zone, I would completely get stopped out. But I wasn't worried because I had higher time frame confirmation that this zone right here was being rejected, and then started forming a reversal. After this reversal, I started seeing a series of higher lows and higher highs, and this was a simple double bottom which is spotted on the 1 hour time frame. This double bottom showed me that price had completely started moving upside, right? So then I viewed the high time frames again to target major levels that I would look for price to reject that, so that I could position my take profit at those levels. The first level that I was monitoring here was this level right here, which I had marked up on the higher time frames. So let me draw a bit of a zone right here. It was a swing high actually, but I marked it up by this rectangle right here, showing some sort of resistance that price could have to reject that. So I was okay with closing all my positions right there. And this was alright, so you can see by here I was targeting, sorry, it wasn't this zone, it was actually this high up here, right? I was targeting this high up here. Let me make it really quick. This zone up here, right? I was targeting this zone as a swing high. It was actually a bigger range that I was targeting, so I took some partial profits because I didn't expect price to keep on going further, but this was my analysis and I finally hit profit. But I was it was a sweaty trade, but I finally managed to close all my positions with my partial. So let me play price for you to see how exactly this trade went. Alright, so let me play price. As you can see what happened. At first you could see that after the close of this engulfing candlestick, it was in a kind of range where it opened with a very volatile bearish candle here, but then I was protected by the fundamentals behind this trade, the technicals technicals behind this trade. This candle reversed at this key level, which was this zone, and then price started imprinting bullish candles to continue this particular trend. So let's keep on playing price. As you can see, price started forming enormous bullish candles, and then I actually closed about half of my positions at this blue line here, which was a zone that I showed you in the higher time frames. I marked this zone up because I knew that price could have some rejections at this level, and I didn't want to lose my amount of money that I would have made by this level. So I took out my partials. A big percentage of my profits were closed here, and then I moved my stops to break even. So I moved my stops above here and then put them a little bit above this candle right here, so that when price could come back, it wouldn't take me out. It would take me out with a small loss, but I couldn't be out with a no, it's not a loss, with a small profit, but I couldn't be out with a loss. So I actually closed this trade at full take profit. As you can see, these great candles smashed right through my take profit, and this was a beautiful trade. So I'm gonna be breaking down more trades for you. Thank you for watching, and then finally you can click the like button to show some appreciation, and also hit the subscribe button, for I'm gonna be breaking down many more trades. Leave me some suggestions in the comments so that I can know what you are wanting to, what you request me to break down for you. So see you in the next video. Bob Millie signing out.